So you want to refinance. That's what our show's about today. So, folks, so thanks for joining me this afternoon. The reason why I'm having this show today is we get a lot of questions about, Dan, how do you refinance? And I thought that was kind of odd. But if you think about it, when you went to buy that house, you probably had maybe parents and co-workers, friends, family members, then you got a realtor that walked you through that whole transaction, and then you bought the house, and then it's like, okay, now what do I do? Because we had that saying, what was that saying not too long ago? I think it's right through here. Date the rate misled borrowers. Now they're financially strained. There was a comment, marry the house and date the rate. So we're going to kind of go down that avenue today, folks. So here's what we've called, if you follow my channel, beginning of the year, I came out and predicted, I said in Q3 we'd be at 6.5% rates, and the overall economy or the housing prices would be basically stagnant. Now, I know there's areas that are going down, and people are probably going to say, hey, Dan, my market's down, but there's also, if the market's stagnant, for some that are down, that means others are going to be up. So that's what we're focusing in on that. So let's get over through some of the highlights that we want to go through. I'm going to go over where rates are, and then I'm going to show you each program what the guidelines are. Because if you bought that house, it's also going to depend on how hard or how easy it is to refinance. And also, if you got a down payment assistance, I hope it's a forgivable one, because if not, you're going to have some troubles refinancing. So without further ado, folks, let's get over to it. So here's what we're looking at right through today. Home prices still grow at the slowest pace since 2012. Well, last year and over the last few years, a lot of people said the housing market's going to crash. Well, I didn't think it was going to crash in prices. My thought was going to be there was not going to be any transactions, and that's exactly what we had. So I was at odds with a lot of people saying, the market's not going to crash nationally like we saw in 2008, and I've been pleading that every year since, and hopefully you heeded my words. So that's what we saw here. Home prices right now are completely stagnant right through here month over month. They're actually starting to retrieve a little bit, so they're down, but year over year they're still up 2.9%. So my apologies on that, folks. I did say they were going to be flat, and we're still up almost 3% nationally. So my bad on that. The next thing is that saying, date the rate. And what happened back in here, and I hope you guys didn't get stuck with this, is a lot of people were saying, okay, continue to buy those houses, even if you can't afford it, because rates are going to come down. I never say that to people. I want you to be able to afford it now, so then when you go to refinance in the future, it's only a savings. Maybe you can pay off some other bills. Maybe you can lower or shorten your term to save you a bunch of money. So I never said to anybody, buy the house no matter what the rate is if you love it, because you're going to be able to refinance. Now, I hope you've never taken it that way. Okay, so now here's what I want to talk about. Rates. Where have they been, and so forth. So a lot of people think I'm crazy when I say rates hit 8% not too long ago. But if you look at historic numbers, let's look at history. Here's the historic numbers over the last, when does this go? Back to the 70s. So I hope you can see that on the screen. I'll try to blow it up a little bit. Let's just condense this a little bit in the last 10 years. This is probably the easiest way to go. Here's what happened. Okay, rates back in here. I got in the business back right in this area right through here when rates are like 9 or 10%. Yeah, that's what they were. If you go through history, let's take out 2008. Okay, this was the debacle. This was that housing crash that basically crashed the whole housing market. And it was hopefully a once-in-a-lifetime event or once-in-history event on this. But let's look at rates prior to that, just for reasons. What were they? 6, 6, 5, 7, 6, 5, 7, 6, 5, 8, 6. That's what they were previously, all the way back, kind of back to the, back here. That's history, folks. So since 2008, 2010, when basically the Federal Reserve came in and they just crushed the market in rates and everything else, they did that all the way through up until almost the pandemic. The rates started going back up, and then we had the pandemic, and then that brought rates all the way down to, and this is crazy. Okay, I got on a 30-year fix, I got 2.625, so I basically got even lower than they have posted here as the lowest in history. Then here's what we're seeing right through here. So rates just not too long ago were it's almost 7.75. What do we have today? 6.5. Well, that's what I'm trying to come out to you guys and say, rates, they're not going to go much lower than this. Okay, there's no catalyst to it, because through here, this was when the federal funds rate was basically 0. Well, now it's 4.25 to 4.5. So you're not going to have rates in the 5% ranges because there's a spread between the federal funds rate, which is, and also, well, the 10-year Treasury is what affects a lot of these things. And then there's a spread between the 10-year Treasury and mortgage rates. And that spread's going to be there until the Fed starts lowering rates. But even when the Fed lowers rates, that doesn't mean mortgage rates are going to drop, folks. We learned that last September. So that's kind of our lesson there. There's no catalyst to get the rates any further down than kind of where we are right now. Can they go a little lower? Yeah. As the Federal Reserve moves and brings rates down, are they going to go down for sure? No. This is all going to be based on tariffs, our economic policies, government activities, spending. There's a whole bunch of things that we talk about on a daily basis that affect these things through here. So basically what I'm saying is right now, this is the low point that I projected for basically the year. We're going to see how the data continues to come through from the Fed, the jobs report numbers, the PCE that's coming out tomorrow, the personal consumption expenditure. But there's really nothing here that's really going to push rates much further down. And if you look at the overall economy, and I do these in my opening bell and closing bell, and we'll do that again tonight, is I'm going to go through and show you the weekly data that we had this week. Employment's good. Inflation's in check. A lot of the data is coming back. We even had GDP at 3.3%, up from 3. Last reading was negative 0.5. So the economy's looking pretty good. We got a jobs numbers today. The unemployment rate the unemployed number was actually lower than expected, and the continued jobless claims weren't as high as expected. So a lot of the data is coming in good. As the data comes in good, that means these things aren't going to go much lower. So that's why I wanted to talk to people today about refinancing. So let's get over to this. I want to first go over and first ask you guys, can you hear me okay? Is everything good out there? And what I'll do is I'll come back to it and answer any of the questions you guys got. But please hang with me for a second. I want to go over each one of these programs and just set you in a position where, okay, if I got this type of loan, how do I refinance? What's my best option? And should I refinance back into that loan? So I'm going to go over some different loan programs with you, and I'm going to show you actually here when Alan and I did this live yesterday on our event, we're going to show you how the pricing, when we talk pricing, I mean interest rates. I'm going to show you when we go in with interest rates, how even just putting in your income alone can maybe get you a lower rate. So, but let's highlight first the different programs that are out there, and I want you to explain these to you. And then the other thing is, we're also going to talk to you guys out there that might have gotten a down payment assistance loan, okay? So if it was a loan, a lien on your property, you're going to have a tough time refinancing. And this is why mostly, if not all the programs that we were offering over the last few years, they were forgivable. And we stressed that because I kept saying to people, down the road, when rates do come down and you go to refinance, if that loan isn't forgivable, you're not going to have enough equity in your home to refinance. So let's go over the guidelines here and just show you guys, how you might get stuck and basically the parameters behind this on, if one of these programs you would qualify for. So let's get over to it. So first we're going to start with a conventional. Now there's two different packages when there comes to a conventional loan. There's conventional and then there's like an affordability loan product, and it's called Home Ready and Home Possible. This basically determines your rate in the program is based on your area median income. So you can go to maps that have Fannie Mae median income, Freddie Mac median income, and just look. You can plug in your zip code, and you can see if your zip code, what is the area median income, and if you're equal to or less than 80% of it, you most likely are going to qualify for a Home Ready and Home Possible product. And I'm going to show you how this actually has better rates than just this one alone. Okay, so if you have a conventional loan, you can refinance rate and term up to 97% loan to value. So again, if you got a down payment assistance program and you put down 3%, because that was the first time home buyer program, but then you got a $10,000 or $15,000 or $20,000 down payment assistance loan, you're going to be stuck. You won't be able to refinance because you're not going to have enough equity. You're going to be over 100% financing. That's why a lot of people did warn people back when, be careful with these down payment assistance programs. Make sure you get into the ones that are forgivable, and the people that didn't do those, you're going to get stuck with those high rates for a while. So you can reach out and see if there's options for you, but you might be stuck. Okay, if you're looking to cash out, we do have a conventional loan cash out program right now. There's one lender that we have in the whole country that'll go to 90% right now. So if you're looking for a cash out, your rate's high, and you're looking for some cash out, you might even be able to refinance now if you have a high rate already with basically the same rate and pull out some cash possibly. And that's how much rates have gone down. You can do that on an investment property at 75%. And normally the debt ratios, you can go up to about 50%. So basically you take your monthly gross income, that's your income before taxes and all that stuff, and you take all your debts divided by your income, and that's your debt ratio. And the debts are the things that are on your credit report, not things like, I don't know, cell phone bills and cable bills and things like that. The things that are on your credit report. Those are creditors. Okay, the Home Ready program basically is this. You can't do a cash out, but here it is. It says income cap, 80% of the median income. Let me just show you guys how to do this. So we're going to go to Fannie Mae income limits right there. So you're going to click this area median income tool. And all you're going to do is, this isn't my website, folks, so this is it, and just click that. What you're going to do is plug in your zip code right through here, and it'll narrow you down and tell you, here's what you qualify for. And let's just go, I don't even know where I'm at, right through here. So this one right through here, I don't even know, Millsville, wherever this is. Their area median income for the program is, you can make $81,360. You make that or less, and you'd qualify for the Home Ready or Home Possible program. So that's how easy it is to find those. Okay, so let's get over to FHA. FHA is a little bit simpler, but same thing. If you did a home or a down payment assistance program that wasn't forgivable, again, you're going to have a tough time refinancing. But the easiest way to do an FHA loan is a streamline. There's no appraisal needed. We don't need to re-verify your income. It's basically just a bunch of paperwork. The thing here is, in most cases when you're refinancing, you can skip one, maybe two mortgage payments. This one's usually tough because you can only finance in the streamline. You can only finance your balance plus 30 days of interest. So when you do an FHA loan, you have to have an escrow, meaning you have to set aside your taxes and insurance. Well, it doesn't have the, it won't fund that, or you can't finance that. Now, you'll have that amount most likely with your current lender, because if you look at your mortgage statement and you look at it, you're going to have an escrow balance. So that means when we pay off your current lender, you're going to get a check for that amount back. Okay, so many times we ask the people, how much are you getting? Because can you float that money for a couple weeks until you get it? Because that's how much money we're probably going to need in your refinance. So you will skip a mortgage payment, but you're going to most likely need a mortgage payment or more because you got to set up that escrow. So that's the downfall, but that's also the benefits of having an FHA loan. It's really simple to qualify. Same thing with VA. VA, basically the guidelines behind these are you have to have, like for FHA, you have to have in most cases, a 580 credit score or higher and not missed a mortgage payment in the last 6 to 12 months, and you're okay. Same thing with VA. There's really, you don't have to go back through debt ratio issues and, the appraisal, because when you did the FHA appraisal or the VA appraisal, they can be pretty stiff. So you don't have to go through all that again. And then USDA, they also have the same product here. A lot of people, they start out trying to get a USDA loan because they're like, oh, it's 620 credit score and 100% financing. I don't need any money down. It's really hard to get approved. You have to be in an approved area. Your debt ratio can only be up to 41%. This is what usually deters people from going that route, or they make too much money, believe it or not. Okay, so that's what we're seeing through there. So let's get over to here. Here's a calculator that we're building in the background. Here's where this is going to benefit you guys, and it's not available yet. But there are a lot of programs available. Now, this is going to help, you're out there, if you're looking to buy a house or refinance, this is going to help you figure out, what programs you qualify for. This is going to be huge for realtors and loan officers. Okay, so what you're going to do with this is how many times you get that loan and you're like, I don't even know what product this fits in anymore. Same thing with the consumer. You're like, I don't know, there's so many products anymore. I don't even know what I qualify for. So here's what this thing will do, and it's almost available. So let me see if I can just go in there. I'll plug in one here just to make it a little simple so it negates out a lot of things. I'm going to say I have a 620 credit score. I'm looking to buy a $300,000 home, putting down $15,000. Household is one. It's a purchase. Monthly debt. So my monthly debt right now is, I got a car payment at $250 and a credit card payment at $200, $450 a month there. Estimated monthly payment, I'd really love my payment to be like $2,200, but I don't know. Let's go over through here. It's a purchase, single family home. So now here's what it's telling us. It's saying, okay, my loan amount's $285 because I'm putting down 5%. So that means my loan to value is $95. My debt ratio, just based on the simple math that we did here, this is your gross income and this is your debts, and this is kind of what you're hoping your mortgage payment would be. So it's coming up with a front end and back end debt ratio. There's that tool thing I was telling you about. See, making sure you qualify with the tool, the income tool for Fannie Mae and Freddie Mac to make sure you get available, or you see if you qualify for any of those boutique programs. I'm going to show you how those come with better rates, folks. Okay, so it's going to tell you, what's your zip code. Is your household income at or below 80%? Not, I don't know, but in this case, I'm going to say, let's say yes. Okay. And to go down through here, is a first-time homebuyer. Yep, I am a first-time homebuyer. I am not a veteran. Let's say I'm a veteran. Yes, I'm a veteran. All right, age, no. Now, down through here, this is where it gets a little bit tricky. If you're an investor, you don't have credit, you're looking for some specialty loans. So if you go over here, this says financing significant repairs, yes or no? How much are they? What are they? These are things we need to know. Is it new construction? We don't work on new construction, but this will help us non-qualify, I guess. Bridge loans, we do have bridge loans available, but we don't need it. Using bank statements, I don't need it on my loan. I just work at a job and I got a W-2. Asset depletion. Do you know if you have a couple $1 million in the bank, you can actually get a loan and not even work? I know some of you guys might think, well, if you have a couple $1 million in the bank, you don't need to work, but some people still need to work. Okay, are you looking for a DSCR? This is for investors, okay? But based on the criteria I put up through here, here's what's going to tell me. And you probably, if you're even a loan officer, you might even not know that there's this many products. So this one's saying I should be eligible for a conventional loan, an FHA loan, a VA loan, because I said I'm a veteran. USDA, nope. Don't make it because where is it? USDA. I'm not in the USDA area. Okay, but this one says I looked at my income and I fit. So now I fit the Home Ready and Home Possible program. This is wonderful, and I'm going to show you again pricing down through here. Now, if I was looking to buy a house, well, my data right through here fits me for the 1% down program. Now, this is a program that will give you up to $7,000 if you're looking to buy a house. There's no strings attached, folks. So this is another one of those products. Don't take a down payment assistance program where you owe money back. It's a lien on your home. You're never going to be able to refinance, okay? DSCR, didn't need it, wasn't an investor, don't need bank statement loans. And look at all these loans. Jumbo loans, asset depletion, non-warrantable condos, reverse mortgages, FHA rehab, I-10 loans, and foreign nationals. So this is where it'll basically break it down. Then what we're going to have on here for our consumers or our buyers is basically you'll go down through here and say, okay, well, click and get rolling. Okay, so let's go down now. Well, let me answer a few questions because I know a couple of people are here. When we come back, though, I'm going to run some interest rates for you. This is that thing we do behind the scenes. This is how we compare over 30 different lenders. But let me get to, we had a couple people be kind enough to join us today, so let's get over to them. Joe, yep, we can do VA IRRRLs. They're simple, and that's probably, let's run, Joe, if you're still on here with me. Be more than happy to run your scenario on here if you want. If you want to give me your data, basically what I need is your home. Here, I'll post it on the board so you can put this up there for me. Okay, so if you guys want me to run, what your rate years would be. If you're on here watching and you're looking to buy, we'll run it right here for you. If you're looking to refinance, we'll do a couple of these. It is busy as all get out today. I did a video yesterday, and you're going to see how FHA loans, I think VA loans too as well. If you're looking to refinance, rates on a 30-year fix in many cases are 5.99. Yeah, 5.99. Right, or that's on the average. There's some a little bit lower than that. But let's go back to it. If you could give me that information on the IRRRL, let's see. I think you asked again. My apologies. If you're still here, please give me the data that's needed. There are a lot of there are a lot for news related to home price corrections. Any comments on that? Yes, sir. Yes, ma'am. Yes, sir. Let's go. I will already prepped with this. Okay, so here's where. Oh, I was prepped with this. Let's see. Well, we can go over to here. Let's just go to this. Yeah, some home prices are deteriorating. That means some aren't. So if you go down through here, this is where's the most recent data we have on housing? This is August 27th. Home prices still growing, but at a slower pace. So right through here, FHFA, house prices index, seasonally adjusted, month over month. June down 0.2%. Year over year, it's up 2.9%. So this is all I really need. Okay, so what this is telling me is nationally, we're up 2.9%. Okay, so that means some markets are down. Let's go over to Zillow, and I'll even show you how that works. Some markets are down. Some markets aren't down. Like my area, my neighbor just sold and got $50,000 more than he was asking, and I already thought he was already priced pretty pretty reasonably. So let's go to Zillow. And I know you guys are going to say, hey, Zillow, you can't trust Zillow and all the other stuff, but let's just go to it and just use the data right through here. What do they have? As of July of 2025, they have right through here, house prices up 2.6%. So again, I get it where you're saying, home prices, well, some of these home prices are crashing. Well, yeah, but if nationally, if they're up 2.6%, I mean, some areas aren't doing so bad. Okay, so that's basically all. I don't know what your areas are doing. That's why I really can't comment on home prices. So, my area is fine. There's some areas that are not good. So I'm just here to help facilitate if you're looking to buy or refinance. That's my job. I'm not here to talk you into buying a house, saying, you should own a house, you're no good if you don't own a house, or you're stupid if you don't buy a house. No, this is your prerogative. It's your financials. If you want to decide, okay, home ownership is in it for me, I'd love to be the person that helps you with all this stuff. Okay, so let's get over to some rates. Here's where I want to show you rates on how they are different in some situations between the home ready and the home possible. Okay, so let's get over to these. But Joe, if you're still here, I need some of that information from you. But if not, let's get over to one of these scenarios. So I'm going to show you how we're going to go over to this piece of the puzzle right through here. Where is it? And I'm going to show you the differences between conventional, home ready, and we'll do the same thing. We'll do an FHA loan with the same criteria person. Okay, so let's get over to it. I'm going to go to my search engine. So over through here, we're going to say this is a refinance. They're just doing a rate and term. Okay, here's where it comes in. This is standard and affordable. The affordable programs are incorporating the home possible and home ready programs. So we're not going to do those just yet. Okay, so what I'm going to do is I'm going to go in here and say I got a $320,000 home. One too many. Let's just make it simple. We're going to say we're going 96% loan to value because that should fit most programs. I'm going to go up here and I'm going to start with a 680 credit score. No income. We're not trying to qualify for any of those boutique programs. And we'll go 60623. That's in Chicago. All right, and it's a single family home and everything else. Okay, so we have a $320,000 refinance with a 680 credit score. What kind of rate can these people get? Okay, so this is what we're doing behind the scenes, and this is how we compare 30 different lenders, folks. So this is just a standard conventional refinance, okay? Rate is 7.125 right here. That's the rates all the way across the board, best rate. This one's actually going to give you $500 in credits back, okay? Let's go back, and we're going to modify this. So let's just go to one thing. What I'm going to do is I'm going to go up here to standard, and I'm going to click and say this person makes... And we'll just make it simple so I know it qualifies, $5,000 a month, because that should fit that criteria for the Home Ready and Home Possible program for that zip code. So let's go through this, and remember that was 7.125 just for a standard conventional loan. Now, some loan officers don't put in your income, they forget to, and this is what they're going to miss. So this one's saying now 6.25. 6.25 versus 7.125. Oh, that's a full percent lower. Okay, so now let's get over to this and say, okay, if this person was, we're going to move this to an FHA. All right, and we'll go through this, same criteria, and hit it. This one should 5.75. So that's what it is. Okay, so this is how the differentials, just by putting in income, might get you a better rate because you might qualify. And this is where loan officers miss it. Many times they'll miss asking you the questions of a lot of these things, and this is basically how you qualify right through here. So you want to make sure you get the right program because a lot of people are just saying, Dan, here's the rate I got. I'm like, okay, I don't care what rate you got. What's the other stuff? What kind of fees are you paying? Don't forget that. And are you in the right program? Okay, those are the things we really want you to focus in on. Okay, so I want to give you a little more tools to help you with this. So the biggest thing that we come across right now are kind of two or three things. One is most people don't have a clue what their credit scores are. Now, they think they do because everybody we ask, the first thing they'll come out and say is, I got a 734 score. And you're like, where'd you get that? My Discover card. Well, that's not the right answer. Okay, so here's a system I'd love for you to use. Now, you don't have to use it. I actually created this thing, so I do if you use one of these systems or whatever, I think I make like $1. But the reason why I did this is I want to provide you guys, one of the first videos I did was on credit and how the differences are between the Vantage credit score. You're starting to hear more and more about that now. The Vantage score is going to be allowed in mortgages. Well, it's already, I think, approved, but it has to be all built out. All the systems are built out on your FICO credit scores. Okay, so a lot of times when people talk, about their scores, they're like, okay, I don't know if it's a FICO, Vantage. I heard they're allowing Vantage now. So let me just make it as simple as I can. Go to creditscoresandmore.com. Okay, this is a free system, and I rotate this all the time. It's either Credit Karma or Credit Sesame. Let's just make sure it's working today and see which one it is. So it's Credit Karma. If you have a Credit Karma account, fantastic. If you don't, click right here. It's free. Do not, and I'll repeat, do not sign up for any of the boutique programs. It's not worth it. Okay, so just use the system, the free system. It's good enough. Okay, if you really want to know your credit scores, now this is going to take a minute because this thing buffers so slow. But if you really want to know your credit scores, everybody uses your FICO score. Okay, so we have right through here your true credit score. I should put in my FICO score. But here's your true credit score. What is it? Well, it's going to take you right to my FICO, because that's the real credit scores that people use. Now, there's different systems built into this. You're going to get, when you sign up for your FICO, and you can use this coupon right up there, and sign up for it. Try it out. It's $4.95 for the first month. See if you like it. You're going to be able to do a lot of things with it. One of the biggest things is it's going to give you your FICO score. Now, it's going to break down your FICO scores. You're going to have multiple FICO scores either. It's going to say, hey, your car FICO score is X, and your credit card FICO is this. Well, you want to know your mortgage FICO, and that's what all lenders use, and you can get it right through here. Okay, so that's how you get your credit scores. So let's go back to this. And where was it again? Okay, so now you know your credit scores. That's where most people kind of get really baffled. Okay, then the next thing is your home value. Okay, don't look at your assessed value on your taxes and things like that. Here's what we do. I'll give you we use Zillow, or I'll just go through here and just pick in 123 Main Street or something like that, and it'll pull up Redfin and all these other things. I don't want to pull up anybody's address on here because I don't know whose I got up there. But it'll pull up all kind of different, websites and give you values. Well, just look through it and just average them. That's kind of what we do. There's no magic to it. I don't know your area, and you might not know it to a T as well. So the biggest things when you're looking to refinance, you need to know your scores and have an idea on what your home's worth. Because what you might be able to do too is, let's say you got into an FHA loan. Your credit was kind of shitty at the time. You did have some money or whatever, but now you might. In the last 2 years, you built up some equity in your property, or last 3 years. You might be in an LTV that you might be able to get out of an FHA loan and get into a loan that you don't have the MIP or the PMI. Or you might be in a conventional loan right now that you can do the same thing. So not only are we going to lower your rate, we'll remove the PMI. So these are all the things that we can help you with on the back end, and basically the whys behind it. So let's get back to any questions that you guys might have. That's what we're here for. So let's see what we got. Best viewer on Streambo, remove the space. I think you do this all the time. I don't know what it is. I don't have a moderator, folks, so bear with me. Could you do one for me? I'm looking to refinance my own occupied fourplex. I absolutely can, Luis. What is, if you give me the criteria, here, let me pop that back on the screen for you. And so you can fill in the blanks there for me. If you can give me all that information, let's go over to the pricing engine. We're going to do a brand new form for you, ma'am. So let's see. That's the data I need from you. So as soon as you pop that up, I'd be more than happy to run this the pricing engine for you. So let's see if you respond. All I just need is your credit score, value of the home, loan amount, zip code. You already gave me that was a 4-unit. So I'll put in here a 4-unit. 4-unit building. It's your primary, not a condo. Not sure if you're going to answer on that one. Louise, anybody else out there have a question? Let's see what we got. Oh, that was that one. Earl, I don't know, Joe, if you came back for us. Well, let's continue to move on. So let's go. The final thing, and we'll wait to see if Luis does provide us his data. But here's a whole bunch. This isn't just a regular website. And this is I kind of created this thing, kind of sort of. I want the tools up here, or the links to be able to be used by you and give you some information. Okay, so let's go across the board real quick. We have a 5-day HELOC. So if you're looking for quick cash. This is a 5-day HELOC. Basically, it's all automated. You click it, and you could have your money in within 5 days. Yes, it's that simple, and it's all automated. So you're going to do everything online, and I won't go through that with you, but this is kind of what it'll do for you. Okay, it's a HELOC. It's fast and efficient. You're going to pick the rate, the terms, the fees, everything else. You basically customize it to your own and create it. Okay, so now here's some tools we got. And I don't know if you're watching this video. Hopefully you did this already. But we have a refinance tool. It's a little different than you click and refinance and learning what is a refinance. What this thing does is says, okay, who are you? What are you looking for? So what it's going to ask you is saying, okay, give me your information. What's your mortgage rate now? What rate are you looking for? And as soon as rates hit that, we'll reach out to you. So that's what this is. And I've been working on this. I actually have been working on this today. We don't sell the data, folks. I control these. And I'll be the one. So keep an eye on your phone, your text, your emails, because if you sign up for RateWatch, you're probably getting triggered here soon. So I've been sending out probably 10 to 15 alerts a day to people to say, hey, the rate hit what you wanted, and I did a personalized video for them and send them directly to them. So if that's you want me to track these for you, I'd love to. Just go through this, fill this out. That's our rate or our refinance tab up through here. Now, a lot of people have gone out and they've already gotten quotes, and people saying, Dan, I've already gotten 7 quotes. I want to see what the best you can do. Stop. Just stop. Okay, this is where I want to do for you. We have a slogan. It's one application, one credit pool. We're going to compare your loan to 30 different lenders. We can do the heavy work for you. But if you've already done that work, let me ask you a favor. Get the best one. And I want to make sure it's the best one because I don't want to go back and forth and back. We're not car dealerships here. We want to just help you out. So get the best one. Call that lender and say, is this the best you can do? Fees, everything. They say, yeah, stamp it. That's the best one you got. Now, what I want you to do is go to our website, upload it right through here. Loan estimate review. Basically, what you're going to tell me is, here, Dan, here's my loan estimate. Here's my credit score, because it wouldn't have that on there. Here's when I'd like to close or when I am closing. If I can do this, and hopefully I have your word on it as well, if I can beat them on rate and fees, all the above, I'm hoping to win you as a client, because you've already went back to them and got their best offer. If we're beating their best offer that day, it means we're going to beat their best offer the next day and the next day and the next day. Why would you use them? But if you haven't done that yet, don't waste your time. What you're going to do is just go to our site. We're going to do all the heavy lifting for you. So by putting in your application here, I don't care if you're looking to buy or refinance, we're going to do this. We're going to get you approved, and then we're going to run you through this thing. And it's going to find us the best rate, lowest fees in the whole country. Now, could you find any better? Yeah, you might be able to if you put a full-time effort in on it. But what we're trying to do is let you continue to do your life and let us do the heavy work. So that's what the basis of all this is all about. So let's get back to some more questions that we might have. I'm going to go, let's go back to the top. Man, all of a sudden we got a whole bunch of messages here. Okay, so let me get to it the best I can. Luis, credit score is, I think I'm back to you, buddy. 775. Let's go to that. 775. Loan amount 783. We're going to do a refinance. 783. Luis, let's see if you had. I do need. Did you answer any others? You did not. What is your home value? And your. I'm going to need your. I think I need your zip code too. I need the property value, your monthly gross income, and your zip code if you'd like me to run that scenario. So we'll wait for Luis to join us. People actually have, they do. I kid you not. Here, let's go over to this. I'm going to show you, I think these are mortgage rates over the last 20, 30 years. If you go here, this rate, it doesn't say that here, but it was 8 point. Here, I could go over here. Back in September of, how do I do this? Let's see if I can get in there. I'm going to go to 23. Watch this. This is where, right here. So, not kidding. 8.03%. Yes, there are a lot. You should see the RateWatch triggers I get on a daily basis. People, you're talking $500,000, $600,000, $800,000 at like 7.75%, 8%. It makes me throw up. So when I start seeing these rates the way we have now, I'm like, I got to educate people, because the funny thing is, many people when they call in, they're like, okay, I don't know what to do, and that's why I do my videos. And again, we started the show, when you're buying a house, you got a lot of support. Even just reaching out to a realtor, they're a lot of help. But when you go to refinance, who do you turn to? I mean, that's the tough thing, and that's why I figured I would do the show today. So let's keep going down through. We got Nick Bowens. What are the requirements to qualify for an FHA loan for refinancing? Nick, here, let's go back to the qualifications right through here. So I think is that the easiest one we got? No, down through here, FHA. So to make it simple, I would strongly suggest we look at the streamline. I'd love to help you with that. Minimum credit score, 580. You cannot have missed a mortgage payment in the last 6 months. You can be 1 times 30 late in the last 12 months. Other than that, you don't need another appraisal, and we don't need to re-verify your income. So as long as your credit scores, we basically base it off of your credit score and the loan to value of where you are. And then that's where we take it. So if you need some assistance with this, just, again, go to the rateupdate.com. Here's our website. And in this case, just click this, refinance. Or you can click ask Dan a question if you want to ask me any additional questions. Just do it right through here. So this is back at our website. There's tons of tools here, folks. There's an Ask Me, Apply Now. You can schedule consultations right through here. Give us a phone call. So we try to make every piece of this data fields as useful as we can for you. So, but that's a criteria. So if you'd love to, just call us right now. Alan's in the office 3 doors down from me. He's available. Or just hit Ask Dan. I'll be happy to call you as soon as I'm done. So let's get to the next question. We got, I have a 6.375. I'm wasting my time currently, or would it be worth looking into? 6.375, it depends on I always look at your break-even thing. If you have an FHA loan, you might be able to get 5.99, probably the savings. You have to, for a lot of the streamlined programs, your rate has to drop at least 0.5% anyways. So that's going to, but in your case, if you got 5.875, it would, it'd qualify you. But it depends on your loan amount. Like if you have a $100,000 loan and it's going to save you $50, I wouldn't go through it, because the costs are going to eat up, and your break-even point is going to be way down the road. So it doesn't make any sense. Usually, I'm always like, if your break-even's 6, 8 months, 9 months, within a year, it's not a bad thing to do. Here's my issue right now. Is there's no real catalyst to bring rates much further down. Because if you go to, and I'm going to do this on my closing bell today, you look at the jobs report that we got today. The PCE is going to be a big important factor tomorrow. We got retail sales, durable goods orders. We have jobs reports that came out earlier today, some other day. The economy's not bad. We had GDP going from negative 0.5 to 3%, then it was just revised to 3.3%. So the economy's looking pretty good. So on the Fed side, they're saying, okay, why do we need to cut? And on the government side, they're saying, well, because the government has too much debt and people have too much debt and need to, some relief. So that's kind of what it's all about. And if you go back in history, when you look at rates, you take out, and I hate to say it this way, since the crash, here's that crash everybody talked about. Since then, mortgage rates have been artificially low for 15 years. And that's the Fed's problem. And this is what's creating the big, massive issues we got now with debt, is they made debt so cheap, everybody did it. So that's what happened. So now you have rates going up here and people freak out. But over history, I mean, you bought a house back in, 2006? You got the rate that you're getting today. So you just take out this little blurb, and we're back basically where we're in history. So, again, no catalyst to really take the markets much, much lower from here. What do we got? Nah, we don't want to borrow more. We want to pay towards the house. Only way I'm moving, it's 4.5. Then wait, you go to the rate. Here, I'll give you a tool for you. Go to the rateupdate.com, click right here, refinance, and put in that data. So when rates hit 4.5, if they ever hit 4.5, I'll be more than happy to reach out to you. So what's the next question we have? I think it's Mars again. Definitely wasting your time. You won't see anything worth your time till I guess that was somebody answering that. How do one get a lender credit to 100% covering refinances too? Yeah, I'll show you that. So here's how that works most of the time. I'm just going to run this. Let's go FHA, rate and term, refinance, and I'm just going to keep it all the same. Let's put this at 96. FHA, rate and term. We'll do an EARL or streamline. Property values 500. I'm just throwing in numbers, folks. Let's say we owe 480. All right, my SCADA score is 775. My address is 60623. And oh, we didn't have all the investors up there. My bad. Okay, so what's going to happen now is this is what's going to happen. I'm just going to click the first one. Don't matter who it is. Here's what we call rate stack. Okay, so when people ask, how much is it to buy down the rate? Here it is. Okay, but the tough thing about this is it's different with every lender. Okay, and here's why. Here's the rates for this company, PennyMac right now. PennyMac's rate on this program is 5.99%. You would actually get $1,744 back in credits. So anything in green, you get back in credits. You see how that you can get a loan for free? Okay, anything in the red is you're buying down the rate. Okay, so if you wanted 5.875, you can pay $1,100 and get 5.875. A lot of times, here's what I'll do. I'll say, okay, the differential there is $39. How long is it going to take me to recoup that money? If it's not a long time, probably not a bad way to do it. So again, if you want, let's say you're short, and you're like, oh man, I'm $3,000, $4,000, $5,000 short. I can actually raise the rate from 5.99 to 6.1 and give you $5,000 in credits to cover any and all costs. So that's how it gets done in most cases. Sometimes you do get a credit. Sometimes there's times where it's like, I'll just waive my fees or my commissions on it or my pay comp on it or whatever, just to help you out, and I can get management to approve it and go from there. I don't like doing that because you don't like working for free, nor do I. Closing costs, great question there. Okay, closing costs. Here's, I can't go into my files, but when you're buying a house, I did this about a month ago, and I live in Chicago, as you guys know, and I did a transaction where the closing costs were, we compared a purchase versus a refinance, and it's amazing. To buy a home, buy my house in Chicago, my closing title fees would have been about $12,000. Refinance, $995. So closing costs when you're refinancing should be kind of a fraction of when you bought. So a lot of times people, they'll look at it and they'll say, well, it makes, I can refinance, but I don't want to spend $10,000 to refinance. I don't want you to spend $10,000 to refinance either. The more you get to know me, the cheaper you're going to find that I am. So if I can save you a buck, I'm going to save you a buck. It's the same way I do my life. Look at this one here. This is also how little perks we can get. 5.875, you'd owe $1,100. 5.9999999, you get $1,744. It's better than 6%. So we're going to give you 5.99999. So these are just the little things on where we can help you. But hopefully that helped you understand the closing costs. Many times, especially with the streamlines, you don't need an appraisal. That saved you $500, $600, $700 right there. So then you just need title. You might have $700, $800, maybe it might be $1,200 in some states. And that might be all the fees that you really have other than setting up your escrow. So not a bad deal. 8:30. Louis, you're back, my man. Let's see what we got. I don't know where we are. Oh, I think I lost you. Let's see what we got. Let's do a whole new search. So we got home value is 830, 850. I got to go back. Hold on a second. I lost you there. I forget how much you owe. 775 is your credit score. You owe, loan amount is 783. So we're going to go 783. 783. Let's go in the middle. This is what I usually do. And this is just so you guys know, this is what we usually get from the borrowers. So when I look at this, I'm like, that's a big variance. It's $20,000. So what I want to do is I'll just go in the middle because I want to be as accurate as you guys are providing me the information for. So let's go 840,000, 93%, 775. I think you said the zip code is 95841. 95841. Okay. And then I think you income is 16,000. All right. And I think that's all. Did you say it was a 4-unit? My apologies. It is a 4-plex. Let's see what the 4-plex does. Don't get a lot of 4-plexes. So let's see what we can do for you, my man. The fourplex adds, and I'll show you if I can show you in this, 6.625, and we might be able to get a little bit better than that. This is, yeah, that's probably about where you're going to be. Look at the difference here. The rate here at 6.625. The next rate down, 6.625, it would cost you $4,500. Okay, so that's how crazy it is. So sometimes we do also have another system. We have about 3 or 4 credit unions and a couple banks on it. So this is our primary system that we use, but we also have a system in the background that we use as well. So that is that part of it. So let's see if we can get to. So if that helps you out, let me know. If 6.5% right around there works for you, go to the website and just click, get in touch with me or put in your application, and we'll be in touch with you right after the videos. What is going to erode the delusion of sellers that their houses? I'm with you. I am with you. When will buyers become more financially educated about this is my whole goal, and I honestly, this is why I started the YouTube. I love to educate. Okay, I love to educate. I want you guys to understand. That's why I come in here 3 times a week, just doing even Stock Talk Tuesday, and I don't, I'm not a stockbroker, because a lot of people just don't understand. And that's how. One of the things yesterday somebody asked us, they gave us a comparison is, if I got a 6.5% rate with these fees and a 6.25% with these fees, how do you analyze it? It's hard. I get it. That's why I'm like, let us do the hard lifting for you. Even if you have loan estimates that you want us to review, let me review them. And I'll be the first one to say, if I can't beat them on rate and fees, stay with who you have. Because I'm not looking to steal business from anybody. I'm looking to make sure you're getting the best offer out there. We got a loan estimate in the other day, and it was an FHA loan. They were charging the person $20,000 in points. We're at the same rate with no points. That saved them Those are the people I'm really trying to keep in check. If you're a loan officer out there or whatever, I'm not trying to steal your business, folks. If you're doing a good job, God bless you. But if you're taking advantage of people or you don't know what you're doing, those are the people I'm not, might be moving on to me, unfortunately. So let's get over to the next question that we have. I want to refinance for how much buy down? Morris. Okay, so let's go over to your rate stack, and it's going to cost you way too much money. I want to refinance at 4.5. So you can't even get to 4.5, and it would cost you $60,000 to buy the loan down to 4.875. So I would highly suggest sticking with what you got now. If the 6, would I pay a little bit of money to get? Look at this, 6.499 is cheaper than 6.5. So if you want to spend $2-3 grand, you might be able to get 6.5. I would just go with this, get my rebate back. Doesn't cost me much anything, and if it drops again, another whatever, refinance again. If it's going to cost you $1,000, $1,500, $2 grand to refinance, and you can save $400, $500, $600 a month over 3-4 months, you're paid off. Then if it continues to drop, refinance. One year I refinanced my house 2 times. It cost me $4,000 or $5,000 to do so, but I ended up at a 2.6 rate. That's nuts. So that's that part of it. We'll get some more questions before I got to go. How long does refinancing take start to finish? Usually about 2 to 3 weeks. And most of the time, it's up to you guys, because a lot of times they'll apply and then they ghost us for a week, and then they wonder why it's taking so long to get their loan done. So if you cooperate with us, we should be able to get you in and out within 3 weeks. That shouldn't be a problem. Next question out. What do we got here? No way. I refinance right now unless the lender offered a free refinance a year or so down the road. Rates are just now getting ready to start dropping. Well, if that's what you think, then just stay tuned and just stay on the sidelines. I'm not telling you, I don't know what tomorrow's going to bring, but basically what I was saying is I called 6.5% at the beginning of the year. That's where we are. I don't know if we're going to go much less, and they've been basically just holding right there for the last week. So could they go lower? Yep. The likelihood is they're going to stay here, might ease a little bit. It's like gasoline prices. You ever go by watch oil prices, and then oil goes down, down, down. Your gas prices really aren't moving. Then the next day it goes up, 20 cents. Oil goes up, $1. And you go by the pump, and it's up 50 cents. Like, what the hell just happened? So that's kind of how mortgage rates work. The MBS market today was flat. And it was funny. We had 3 banks reprice for the better. And even Alan yelled down the hall. He's like, we got reprices. What's going on with the MBSs? I'm like, nothing. So they might be sitting on some gunpowder on the sidelines. But if you want to stay on hold, God bless you. Just stay on the sidelines or click in my RateWatch tool, and I'd be more happy to monitor that for you. The next one, been following you for some time. Thank you. Appreciate your vids. Well, thank you so much for joining me today, and thanks for the kind words. Sometimes I need it because every once in a while I just get abused in some of the comments. They're starting to taper down, but I appreciate the feedback, folks. So that should do it for our show today. Hopefully you learned a little bit of something today. How to refinance. Does it make sense to refinance? Should you refinance? And folks, I'll never tell you should be buying a house or you have to refinance or anything. My goal here and my whole shtick, I guess, is I want to help you. And that's truly what I want to do. So if I can be of any help to you, and I'm licensed in all 50 states as well as Puerto Rico, and now you understand how we compare your offer and your rate to 30 different lenders. And that's how we do it. So I can facilitate all your needs right through here at the rateupdate.com. So that's it for today. I got to get going. I got to do get some callbacks, and then I got to do my closing bell to let you guys know how today ended. So thanks for watching. If you need some more assistance, please go to the rateupdate.com. You can click the Ask Dan button, call us in.